AMC had a monster weekend. Godzilla vs. Kong brought life back to the box office, and the movies aren't dead yet, which we predicted would be the case due to pent-up demand because of the pandemic guidelines. There were only so many games that we could play before wanting to get back out and see the big screen after all. Theaters are showing results and analysts are beginning to take notice. Let's look at the weekend news affecting AMC and let's get to it. What's up YouTube, James from Thursday Media here, and in this video we're giving a quick update on AMC and the stock after the release of Godzilla vs. Kong. Last week, Godzilla vs. Kong was released and has been on a tear, topping the box office and bringing in nearly $50 million in its first weekend. Keep in mind that this is both with limited capacity in theaters and being released simultaneously on HBO Max. For comparison, this puts it on par with its predecessors, Godzilla King of Monsters, which opened at $47 million, and Kong Skull Island, which opened at $43 million. These were pre-pandemic numbers, and to see Godzilla vs. Kong reaching better results with limited capacity sends a clear message that people are ready to get back to the movies. And a clear message that people should always be ready to send is hitting the like button so that YouTube knows that we're still in the game. And today we got our first analyst that agreed. B. Riley Securities upgraded AMC Entertainment to a buy in a Monday note, raising the price target to $13. Here's what they said. We are also taking this opportunity to upgrade AMC Entertainment Holdings, AMC, from neutral to buy, along with raising our price target from $7 to $13. This morning, shares were trading below $10, so this would reflect an expected 30% increase. They continued, "We have remained impressed with management's ability to weather the pandemic headwinds by both strengthening the balance sheet and negotiating with landlords to improve the cash runway into 2022. And as the largest exhibitor in North America that also operates the highest number of premium IMAX screens, we view AMC as well positioned to benefit from the industry's projected resurgence and return to pre-pandemic attendance levels by 2023. This, of course, refers to the expected demand for people to get back to normal pre-pandemic life and get out and be able to do the things that they haven't been able to do over the last year. They also make a good point on landlord negotiations, and while I think that management had a strong role to play, I also can't see landlords wanting to strong-arm tenants too much, as they would be unable to easily fill these buildings. Continuing, our only concern and reason for the prior neutral rating had been the high levels of debt on the balance sheet and the strain this could place on future cash flows. However, with management increasingly signaling the ability and willingness to utilize equity to reduce the debt load, we can now be more constructive on the upside opportunity for the shares. Now, this has been a fair point and the gripe of many analysts that AMC has a high amount of debt, and with theaters being closed, they're not likely to be able to pay it. But AMC raised nearly $1 billion over the last 12 months by selling shares. We knew all of this already, and so did they, which means that those last bits were fluff. What analysts were really waiting on are box office results and to see if people are stuck on streaming or will go back to theaters. But regardless, while this is good news, this isn't the main focus for AMC investors. We buy the stock because of the ridiculous tactics hedge funds have been using on it to put it out of business, and to keep buying it to try and make them lose. So while this was a technical report, and we do have some upside today, AMC stock doesn't always work on technicals. We are seeing some defensive measures being put into place that would potentially address the growing risk of a massive short squeeze among meme stocks, as the NSCC has recently proposed rule changes, and now the DTCC dropped their own major changes in DTC 005. I'm not going to get too deep in the weeds on the details of this document, as there's several other YouTube channels that have covered this in detail. But to quickly summarize, the new DTC rule would help close an option loophole that hedge funds have been using to potentially make their short positions appear covered. The major provision of the rule keeps synthetic shares created by market makers attached to options contracts, as opposed to being used to make short interest appear lower. It has long been a concern that institutions were manipulating the stock price with synthetic shares, and the media has been trying to debunk this. Article after article has been pointing to the low short interest, saying a squeeze won't happen. Well, if that is the case, then DTC 005 won't matter to AMC or GameStop stock at all. But the DTCC and the NSCC are rolling out rules very quickly, and many of these changes address loopholes that have been okay to use, at least until recently. So why the sudden urge now to make these changes? The DTCC can see all of the market information as it relates to their members. The rule doesn't come out of thin air, and is most likely the DTCC's way of telling the hedge funds to stop using options contracts as a way of creating synthetic shares and making it appear as if their short position has been covered. Now, I don't think that the DTCC is out to help retail investors, but they are responsible for making sure that their members don't do anything crazy and put the organization at risk. By closing these loopholes, it would at least level the playing field a little more and reduce the clearinghouse's exposure to being the bag holder. All AMC really needs now to break out is for one hedge fund to break ranks and cover their position. This really has become a game of who blinks first, and these new rules are kicking up dust around hedge funds using shady tactics. Of course, a week from now, we may discover a new method that they're using to hold the stock price down, but the beauty of the internet is that word of these changes and methods are spreading quickly. And that's hopefully enough to continue to encourage investors to hold what they have and buy more when they like the stock. But as always, I am not a financial advisor. I'm just a regular guy with a regular job who likes watching giant monster movies at AMC theaters. So make sure that you do your own research on any purchase that you make and that you're following a financial strategy that you're comfortable with. I'm sure many of you are already investing with a broker, but if not and you'd like to begin, I'll leave you some links down below that'll help get you started. If you like this video and you want more like it, make sure that you subscribe to the channel. I post every Thursday and Sunday unless I throw in a bonus. Keep hanging on, enjoy the theaters being open again, and as always, thanks so much for being here, and I'll see you in the next one.